Okay, so I'm currently in an escrow repping a buyer on a condo. We've had a little bit of a challenging escrow since the seller, who I'm not representing, can only move forward on the transaction with us if he finds a replacement property. So it looks like we're in the final stages, and it looks like he may have located the property. There was a replacement property contingency placed on us closing escrow, which means that unless they remove that contingency, even if there's an established close of escrow date, we can't move forward. So it looks like the listing agent is likely going to remove it in the next couple of days, but we gave them 2 extension of time addendums for that relocation contingency. We're per the last one, we're scheduled to close tomorrow, but I know that's not happening. I've been in constant communication with the listing agent, and it looks like they're going to be able to remove that contingency probably Thursday or Friday. The challenge that I'm having is that my buyer, who I don't know well, I met her through one of my listings. She came to my listing, condo on the same floor, and she ended up buying the condo on the opposite floor. But she said, look, I called the agent, never answered, you answered, so now I work with you. So it worked out in my favor for picking up the phone. The only thing is she's an attorney, her husband's an attorney, son's an attorney, right? So if there's a deadline today, I get a message 3 days before, hey, so are we closing? When are we closing? We're supposed to close this day at this time, which is fair. Per the last extension of time addendum, she said, look, we're granting it with the understanding that there's no more extensions after this, right? This was last week. So today I have to deliver to her the news that we're not closing tomorrow, but I obviously would like to package that information in the most positive way.
All right, and I want to back up to make sure I've got my head wrapped around it.
Yeah.
So you're not closing on time because you're doing a 1031 exchange, and no?
Nope. So my buyer, regular buyer, the seller that I'm not representing, he owns a condo, but we can only close that condo if he can find a replacement property. Otherwise, he becomes homeless.
Oh, so it's not about taxation, it's about primary residence.
Correct.
Okay, and the seller's
the seller's stalling, and this is the second delay. We were supposed to close September.
So what's your buyer's story? Does he have an alternative living arrangement?
Yeah, they're fine. It's just they're extremely, we already have that in place. There's a 30-day lease back. For her, it's more about we were supposed to close on this day. She's extremely wealthy. So it's more of if I don't get what I want, then I move to another transaction. So I'm trying to package it in a way, and I wanted to give her 3 options. And the options because I know once I send her the email that the listing agent sent me today, which essentially communicates we can't close tomorrow and we're probably going to close sometime next week. Keywords, we don't know if that's even going to happen. I wanted to give her 3 options, and one of them saying, we have 3 options. Option number 1 is, for example, we do a notice to perform and we start a search for another property. Option number 2 is we send them a demand to close, which gives them 3 days to close, but we risk losing that property, getting into a possible bidding war for another transaction and starting all over. Or option 3, we can grant them the extension, which will likely result in us closing in 7 to 10 business days. What option do you prefer? And it's kind of like packaged so that the last answer is the one she goes for. I'm just wondering if you have any other recommendations, because she's had the tendency twice when we had to do the extension of time to say, you know what, I'm sick of this. Let's just look for something else.
Okay, I think I've got it. So the buyer is the licensed attorney, right? Both husband and wife.
And
okay. So you've got ego at play. They like to pick fights. They like to win arguments, and they like to flex their intellectual muscles, right?
Yep.
So you have to show them that. And without going through it all, it comes down to one question. Like, you guys chose this condo because it met all of your needs. Is that right? Right. Okay. So a week ago, you wanted nothing more than to close on this condo. Is that right? And today you want nothing more to close on this condo. We've made an arrangement for a leaseback, so you'll be compensated for the time that the seller is the time that they hold the asset. I have already put a proposal on the table that converts frustration into income.
Well, they're not
Now,
a free lease back. Just I wanted to give you that. It's free lease. But we were going to negotiate it, and attorney said, you know what? I don't want to negotiate. Just give it to him for a month, and then I just want to get the condo.
okay, then there's another option for you. Put an actual lease price to your lease back.
Okay.
So that's just another gambit, right? It's something else you can use to sweeten the deal. But the way I would close the loop on it is say, listen, do you want to be right or do you want to be happy?
Yeah. Fair.
It's that damn simple. If this is still the condo for you, then let's be patient. Let's get a fair lease price from them for that's prorated for the time that they're in there. And if not, I need to know if something changed, if all of a sudden this condo doesn't fit you. And we're not talking about the seller. We're not talking about people. We're talking about you people and that real asset. Has anything changed? Do you people want that asset? And try to get them to remove the people from it and be objective about it. And just say, listen, like you've got a little, you're not the one that's facing homelessness or living in a hotel with your family. If it doesn't close, they're in that position. So all I ask, like I represent your best interest, but to me, you guys really love this place and you really wanted to close on it. So what I see as what I can do in your best interest is I can turn time I can get the asset into your name and we can give them some time to make the situation work. And ultimately my goal is to get you the asset that you want at a fair price. So in essence, it's getting cheaper every day that they delay. And we can even put an above market premium on the rent. Like if it would rent for $3,000 a month, we're going to rent it for $3,300. We're going to slap a 10% premium because we want to build in an incentive to move on, right? So you've got to find a way to have them put down their swords, and that's metaphorical for the ego, and put their damn ego down and really focus on the emotional decision they made of, hey, we really love this place. We would love to have, because now they've made villains out of the other people, and they're not being empathetic to that person's position. And they might not be, I mean, they're obviously, they might be super wealthy, but if they are, they understand the time value of money. And if you can convert a frustration into a revenue stream for them, how could they not come around?
Yeah, that makes sense.
The other thing I would do to prepare for that conversation is pull an inventory list, pull a days on market and look at available days of inventory. Like do a market absorption analysis on that type of asset and be like, here's the deal. You guys jump out of this one, there's a good chance if you get your earnest money back, it'll have to be in a courtroom. And I know you might like that, but your time is valuable. So I'm showing you a way to be paid for your time, not to have to fight. And in the end, you get what you want. This other pile of money that I think we can get for you, because market rent is X. We'll propose a 10% premium. And on a 30-day lease term, and it'll be prorated to the day of closing. We'll refund them anything, but they will pay us for an entire month up front. So you're essentially mitigating the risk of that person taking even longer if they surprise us. And we'll get you an above market rent and eventually get you the house you want as soon as that agent can help. You remember how hard it was to find this place? That's what he's going through. Like all that stuff we went through, that's what he's going through. So let's cut him a break and let's monetize the situation and just chill out. You guys trusted me to get this done. I'm telling you, this is how we get it done. I'm here to serve you. If you're telling me something has changed and you're ready to give up, then we'll go back to joining the bidding wars, and we'll put you in his position. You'll be empathetic to his position real fast. We'll get started tomorrow.
So perhaps with the new extension of time addendum, we present that with the contingency removal, because I kept I didn't remove contingencies to save them so that they would have a way out. Extension of time addendum, contingency removal, and essentially a request for to modify the free lease back into a monetized lease back. Does that sound right?
Yep.
Okay, cool. Awesome. Thank you. Really appreciate it. I've been like going crazy all morning, actually, for the past week, but
yeah. No worries. I've had to use, do you want to be right or do you want to be happy? And that snaps people into reality pretty quickly.
Yeah. Thank you so much.
Cool. Thanks, Fed. All right. a little bit of a format change because Fed was chomping at the bit. But welcome everybody to Probate Mastery Group Coaching. With Kat's guest hosting a few weeks ago, we started with the calls with a theme. And if you guys didn't notice, I'm in my Virginia house. I actually drove all the way from the extreme Pacific Northwest to Virginia in 7 days. So this is probably about the fifth or sixth probate house that I ever bought, and I still own it, and I had it leased as an executive rental. So I'm back here transitioning this, getting it cleaned up to go buy another house in probate in a different state. Excuse me. So I tend to collect these things, but so I'm back in my office. But as I was driving home this week, one of my certified probate expert that I trained, 4 or 5 years ago from Northern Virginia called, and he had a tagger by the tail. So he's uncovered an estate, but with a business opportunity and a small business opportunity. And this is something we haven't really talked about much in this forum. I have another brand and company called Your Small Business Hub. So I'm quite familiar with the small business crisis that I believe we're facing, namely in the baby boomer generation. So you guys are working in a space where if you haven't already, you're likely to uncover an estate that actually includes a small business. So I wanted to kind of start there. It's probably not something that you're thinking about because when I got done with this coaching call, this guy was just lit up and he was like, he couldn't wait to get off the phone and dig into the prospect of acquiring the small business in addition to the real estate. It was a wide-ranging conversation. There's a lot of benefits. For me, I actually sold almost all of my real estate in 2016 because of macroeconomics making me nervous, because of over leveraging, and well, we see what's happening in China now. Just hurry up and wait. But I chose to invest in small business, and I've had a better return in small businesses than I ever have in real estate. And yes, they're challenging, but it's a lot more fun as a challenge than tenants and toilets. So for me, landlording wasn't really it. I found small business was much more interesting. So we started talking about what do you do when you find these? So we've got 13.3 million baby boomer owned businesses that are in a revenue band between $1 million and $5 million. And small businesses represent 51% of GDP in the United States. Of those baby boomer business owners in the last 2 years that tried to sell their business, 1 in 14 found a buyer. Now let that sink in. You've got a 70-ish-year-old person who has spent a lifetime probably building this business, and they go to a business broker, one of only 1,300 in the entire nation. They put this on the market. They sit and wait for typically 6 to 9 months. And then finally they get it under contract. They go through due diligence and 13 of 14 will fall apart. And then they're left with the decision of what do I do? Most of them will shut down, sell for the value of the real estate and the equipment. So the goodwill of the business, that valuation is just dissolved. It's gone. Jobs go out of the communities. That market share usually flows to bigger businesses, bigger corporations, franchises, and America changes one little storefront at a time. So for me, I felt a calling to try to make a difference in this, to step up and do what brokers obviously aren't doing and business owners aren't doing for themselves. Equal blame to them. They can go find buyers without brokers. But I coached him to step in and buy the business. And once you understand the scale of this, that there's over 13 million people that are about to be in this situation over the next 10 years, a lot of them are going to be your clients. They're going to be a spouse will pass away. The surviving spouse will inherit the house, the business, the stocks, everything. And they've got to figure out what to do with that because oftentimes the next generation doesn't want the business. And that's what this situation was. So I coached him to actually not cut the children out, but to acquire 100% owner financed and then use the kid who is acting as a general manager and give him a vesting schedule of 10% per year for 9 years until the kid owns 90% of the business and he owns 10%. And then he steps back when he becomes a minority partner. And there's an opportunity to do that. Like you hear me talk about subject to houses. It's even easier to get a free business. So you've got a business skill set. You've got the courage. You're a small percentage of the population that has the courage to be in charge of your own income, to provide your own benefits, to be a true entrepreneur and take that risk. So you've already beat that learning curve. Like that's the hardest part is just having the courage to do it. So as you're buying houses, as you're, investing in stocks or whatever you're doing, in the course of venturing into this space, always be aware there are business assets that are sitting out there that nobody's going after. Nobody is marketing to families in probate looking for those businesses. And if they are, they're probably a business broker. They want a big retainer up front. They're going to prep them and say it's going to take a year to get this done. We can take our cash buyers, or we can be the buyer. You take investors who obviously understand business from your buyers list, from your past clients, or yourself, your family, whoever it might be. Bring them into the situation and say, listen, we'd like to buy the business. It's obviously a big risk. If we go the SBA route, it's going to be 9 to 12 months, considering the backlogs and like the people I know that are using SBA loans, newly originated SBA loans. Since COVID began, the fastest one I've seen close was 9 months on those. So you can kind of paint that picture and say, we can go through the process of trying to sell it the normal way. We have a 1 in 14 chance that you'll actually accomplish that. Or we can go to, my buyers list, my investors, or you can make them an offer. But the idea would be to show them how their legacy can live on, and you can convert their business into an annuity or to a retirement plan, and you can minimize their taxation. So if you can keep, especially if they're willing to go long term, if they're younger or they're very healthy, if you can spread that out over enough years, you can tamp their capital gains down to zero. So if this is let's just say that it's a $400,000 business. Well, if they don't have other earned income, if we can drag their equity payments down to $39,999 a year or less, guess how much their capital gains tax is? Zero. So they can sell that business on a 10-year note and take installments of $40,000 a year, and over 10 years be paid out tax-free, where they have a 1 in 14 chance of selling it outright. But if they do, it's going to knock them into a 20% capital gains bracket. So we can, through understanding taxation and creative financing, we can take a business owner and show them how their legacy can live on. We can convert their business to a retirement plan, and we can optimize that retirement savings by making sure we don't break through their capital gains limits. And we can do all this with the help of attorneys and CPAs to check our work. We're just putting a broad stroke strategy in place. But that was a conversation that I was excited how excited he was. And we, he had a million questions and we unpacked that. But something I just wanted to kind of bring back to the surface and remind you guys, this isn't always just about real estate. It's about people and families. And those people have assets, and they range from antique cars to the Jim story with the $43,000 Lionel train set to small businesses that are ready to step right into. And for you guys personally, if you're going to purchase the business if you believe in the track that we teach of work less, earn more, work less, do good, try to get a business that's between $1 and $5 million in revenue. Because $3 million, usually it's not large enough to have the salary there for a strong general manager or a chief operating officer. Between $1 million and $5 million, it's still below the radar of the M&A firms. Brokers aren't even that interested in it. And that's the most underserved niche. But shockingly, that's where the majority of, that's the kind of the middle of the bell curve in small business. Ted?
So I just want to make sure I'm understanding correctly. So these are businesses, we're discussing businesses that perhaps either, I don't know, whether it's pandemic or something else, just kind of went belly up, and therefore you're coming into, I'm just trying
Maybe, but ideally you find a probate situation with a healthy, thriving business and step right in.
Gotcha.
Hey, Chad, are you going to keep the suspense and not let us know what business he was looking at? Because I was going to ask, there are certain businesses that fit people's personality and or expertise, right? So we can't, I'm sure not everyone can get excited about a business that they have no idea about.
So here's how you get excited about a business. If you put $1 to the bottom line of a P&L, what does that do to your valuation?
3x on a net
at a minimum. If you're in that $1 million to $5 million range, you're 3 to 5x on your EBITDA, your net operating income. Now, in real estate, what's your dollar for dollar return when you rehab a house?
25%.
So if you put 10 grand into a house, how much more is the house worth?
If you do a kitchen or bathroom or something, isn't that like the 20% range, or is it more?
It may be. In a lot of cases, it makes it faster to sell, but you also get taxed hard on that money. So with a small business, you can depreciate real estate and there's obvious tax advantages to that. But with a small business, you can, as you grow it, you can basically take your taxes to zero just by zeroing out your EBITDA on your P&L each year. And you can do that by purchasing real estate through the business that eats up your profit off of that. So you're not paying corporate income tax and then you still control the real estate. So maybe this was out of context without hearing the whole conversation, but for him, the smartest play I could see, he was looking for a way to just quickly wholesale the house. And what do I do with this business? I'm like, you should buy the business. And you're right. Like sometimes like a tire shop isn't a very sexy business, right? But I'm going to tell you, that's one of the best investments. That's one of the best businesses you could buy in the world right now. I have friends that are building them, that they can't build them fast enough. They're building dozens at a time because it's, especially as the economic reality of this situation said, mechanic shops are going to go through the roof. And we're underserved already. But when more people start keeping their vehicles and the repos start happening on all the incentivized government money sales that happen, what you're going to see is mechanic shops are going to do really well. Tire shops are going to do really well. Home services are going to do really well. So a maid business, like if somebody has, had a housekeeping business, not sexy, not a business you want to do on a day-to-day basis. That's why you find one that's got at least $1 million in revenue. So you've got a strong operations person in there. And if they're not already there, you can afford to hire them. But ideally, you take somebody who feels like they know how to run the business better than the owner. They've been against that glass ceiling for several years. And you go empower them and you say, listen, man, I need you to run this for me. And here's what we're going to do. Here's your vesting schedule. In 9 years, you basically own it. And I'll hold 10%, but I'll allow you to earn in and invest the rest. So it doesn't always mean that you have to be in the business. If you don't want to be a maid, I understand that. But if you have a 20-year employee who's been working for $50,000 a year, and you can easily afford to give them a raise and then let them vest in, and you can get the seller to owner finance that because his wife ran the business and she just passed away. He doesn't know anything about it. So those types of situations where you can show him how to keep those people employed, keep his wife's legacy alive, and then you don't actually work in the business. You just work on the business once a week in a team meeting.
Now you got like my wheels spinning, but full transparency, I don't have a lot of experience as an investor. So my parents came to me, obviously they retired, and they said, hey, look, because I always nag them about, hey, don't keep your money in the bank. It just depreciates day over day. So they said, all right, so figure out a way to, we have $100,000, tell us where to put it. So obviously being in real estate, my first thought was our income property, not in LA, because can't buy anything here, but even out of state, I'm open. But now you're talking about businesses. Now, given that they're retired, I wouldn't necessarily think that they want to run any of that, which would mean that I would probably have to do some of it or at least be involved in one way or another. What do you think could be a suggestion for them to look into, or I can look into for them?
I would probably start with franchises in that scenario. So typically people will pay a big franchise fee, then they'll buy all brand new equipment. They'll finance that. Then they get in it and they're not making what they thought they would, or they're going through a divorce, or there was a death. And this is getting outside of the scope of just probate. But you could find, to say, I want to find a franchise in LA between $1 million and $5 million revenue, that will exist. Maybe now, maybe tomorrow, maybe it'll take you 6 months. You'll eventually find that, but that's quite specific, right? So if it's more about finding a business for your parents, I would look and say, let's look at what franchises make sense right now. So for example, I wouldn't go buy an AMC theater franchise. I wouldn't buy a Crunch Fitness, but I would buy a Firestone tire shop is one of those franchises. And the Dollar General is already like that. That's oversaturated. But there's certain franchises that make a lot of sense. And this is a deep rabbit hole. But I believe that like the valuations you see in equity markets right now are driven by fake money and the Fed moving junk bonds on their balance sheet. So equities markets are currently trading at 142% of global GDP. It's a bunch of bullshit. So we're heading into a very recessionary period where it's going to look more like the Jimmy Carter year stagflation, where you've got production going down and inflation like ripping up. And they're even with the manipulated numbers that exclude food and energy, it's still like massive inflation, right? So I see great economic headwinds ahead of us, and that makes me want to look at recessionary proof businesses. I invest in self-storage. I invest in mobile home parks. I like home services. I like auto mechanics. And then you've got the baby boomer generation, and we've been posting record years for RV production, both new sales and used sales, mobile RV mechanics, any kind of a mobile mechanic, like those types of businesses. If you can take a guy who's already working there, who knows how to run it better than the current owner, and he's never had a voice because that owner's like, I'm the boss. He's been pressing on that glass ceiling and he won't leave. Like that's the kind of target you're looking for. But I would, you can look at, if they really want to be hands off, you can go into a franchise. So the franchise prototype and franchise support is in place. But look at those things like Molly Maid as an example. So in LA, I'm sure there's multiple franchisees for Molly Maid. The costs are insignificant. Like it's they're not equipment heavy businesses. So you could potentially go look for one of those, have one of the maids that really understands it, the one that is kind of the supervisor, say, how would you like to own this company? Well, if I buy it, that's going to happen over the next 10 years, but I need you. And what you're doing, the reason I'm suggesting you turn an employee into a manager and then put them on a vesting schedule, it's the way that you can turn it into a passive investment, because they don't want you, if you're able to make $2,000 or $3,000 an hour working in real estate, why the hell would you be working in a maid company? It's about getting a passive investment. So if you can invest those people in, what are the chances they're going to leave when they've never, ever owned a business? They've never known what it felt like to own equity. They've never gotten a distribution check. And every quarter they get this big ass bonus that they don't even really understand, but they know it's like, I did that. So you instill a sense of pride and responsibility, which locks them into that role, and they'll never leave you. So if you can find things like that are around auto, home services, laundromats are incredible. If you can find laundromats, they're phenomenal investments. The challenge there is collections. Like it's not as passive as you might think, just because everything's coin operated. There's cleaning, there's collections and deposits, and there's dealing with the jackass that kicks the door in and pops the coin tray with a crowbar and runs. Like there are problems, and there's typically not enough revenue for you to have a GM that's there all the time. But anyways, man, this conversation could go so far and wide. That's the world of business. When you realize the opportunity, I mean, it opens up into, there are literally tens of millions of opportunities to step into existing cash flow for free. No money down, no banks involved, no SBA lenders, and you can always refinance on long-term SBA, and it's fully assumable non-recourse debt usually. So like you can always come back and do that. But to acquire the business, you don't have to, because there's so few buyers in the marketplace. Now, I've got your gears turning. What I will suggest, because I haven't built a course on this, I have a site. If you want to check out Your Small Business Hub, that's one of my brands that I frankly haven't done enough with. A friend of mine, Cody, has developed a whole course on this. So Cody and Ryan, it's about a 20-hour course. It's on this type of acquisition. So we were both walking the same path and merged. And so I have a link somewhere I'll drop. So in the show notes here, I'll drop a link to that course. And I think it'll come with a 25% discount code is what the agreement we had. But so if you want to dig in, and Cody is, so just to give you she was a first generation immigrant from South America, went to college, realized really quickly that to get ahead, you've got to push and ask for what you want. Found a way to make herself more and more important in every role she ever had, eventually worked her way onto Wall Street, running M&A firms or private equity firms for Goldman Sachs. and she runs the Entourage Capital, which is the cannabis division of Goldman Sachs, as a female in a man's world on Wall Street. So she has watched the consolidation happen within multiple industries, but cannabis is one of the most cutthroat industries we've ever seen this happen in so rapidly. So the farmers, the producers, anyone who touches product just got hammered. They got wrapped up. They got squeezed. They got consolidated. They got bought. Those got consolidated and then sold up into these bigger firms. So she has dealt with small business from the trenches of private equity, but she's also came from absolutely nothing and built her own. And now she's stepping back and kind of throwing down a rope and teaching other people how to get into laundromats, how to get into auto repair shops, how to get into pressure washing business, lawn mowing businesses, whatever. Sometimes they're not sexy. It's all about the return, the cash flow. And without a lot of times just understanding business. Yeah. So Kat just dropped a link there, but that one's not going to give you the 25% discount. Cody gave us a thick link, Kat, that I don't have bookmarked. So you guys can check out the course there, but we have one with a discount code. We'll drop that link in the show notes. But Cody she's worked in everything from just a side gig all the way up to private equity at the highest level. And Ryan Snow, her partner, co-wrote with Hal Elrod that he and Ryan wrote Miracle Morning for real estate brokers or real estate agents, or I don't know. Hal has rewrote that book I don't know how many times, but Ryan's an author. He's a franchise brokerage owner. He owns multiple small businesses. So they got together and collaboratively built the Unconventional Acquisitions course and community, and fully support them. You got very sharp folks to learn from. It's a really good value, just like this community. Once you take the course, you're part of that community. And it's an active community. I mean, every day and what's super cool, just like this, Cody kind of, I think, looked at what we were doing and took some inspiration from that. But just like this community, you've got students coaching students, which is awesome, or alumni coaching alumni. So it's a really good community to be part of.
Speaking of books, thank you so much for recommending Who Not How. I already gave it to two people already. I think I have an hour left on the Audible, but yeah. I mean, I listen to an hour at a time, but then you're like, I gotta go now.
It's a really cool format on Audible for anyone who hasn't read it. Ben Hardy is Dr. Ben Hardy is in Strategic Coach with Dan. And it was really cool because Ben, the author, is the Who. Like he was a Who for Dan. But what's super cool about that, Ben and Dan said, I don't want to be a part of writing it. Ben wrote the book, and then he reads the chapter and then brings Dan in for a conversation.
Yeah, I love it.
So I've never ever, I've read thousands of books. I've never had one like that where the kind of the inspiration for the book, the one who delegated it or issued the challenge, shows up to give his take at the end of each chapter. And I thought that was a really neat format that they chose to do that. And I think that probably was Tucker Max is kind of he's the top guy in publishing right now. And Tucker's the one that published that book. But I think it's a super cool format that makes it stick even better.
Yeah, it does, because you actually grasp not just the context, but you grasp the thought process behind how the concept was put together by it's amazing. I completely agree with you. It makes, I don't know, you just absorb it a lot faster.
Yeah, cool. Well, good job reading that. Anyone else who, if you haven't read it, Who Not How is a really great book on delegation. It's in the Probate Mastery reading list I think we have that on the Facebook page. Actually, no, it's on the website now. If you look in the footer at probatemastery.com, I think the recommended reading is actually one of our footer links. Christian, so you'd said, how much money do you really need to invest in small business? The answer is no. The business has the money. You just have to find a way. You have to get the seller to trust you so you can step into their position and use their money to pay them out. And understanding small business and, the operational turnaround is the quickest way to add equity to a business. So you do a better job marketing than them, or you spend less money on X, Y, or Z. For an example, a friend of mine and I are underwriting this is a baby boomer situation. It's not a probate yet, but he's in his late stage of life. His son works there and works his ass off. He's scared to death to step into the business. So we're negotiating with him for 100% owner financing. The son vests in at 10% per year. We maintain a controlling interest until we get to 90%, and then we become limited partners instead of general partners. But the way he's looking at it is his alternative is his son has to go find work somewhere else, and he has to figure out how to get the most amount of money out of the equipment. It's niche equipment. They're making manufactured countertops in a really small town in West Virginia. But the cash flow on this thing's amazing. The problem is you've got 45 years of junk in a shop. So they're filling a mold here. They're breaking a mold here, taking it all the way back to the end of a 450-foot shop, refilling the mold, then bringing it all the way back over here to break it for polishing and sanding and detail work, and then taking it all the way back. So we believe we can increase operational efficiency on a daily basis by about 35%, which translates straight to the frickin' bottom line, and literally make millions of dollars in the first quarter that we own the business without spending anything. We just throw the damn junk away and clean up the assembly line. And you just go in and apply a little bit of Henry Ford to it, and you can increase operational efficiency by like 35%. So that's the easiest way to come up with the cash, is come into the business with better ideas than the current and if you can get them to agree to 100% financing with clawback provisions, so you mitigate the risk in case you're lazy or you're not a good business owner. Just have clawback provisions where if you miss a single payment or if you don't meet a certain milestone, then that equity can revert back to the seller and he can take control of the asset to protect his asset with a light down payment or no money down.
Okay, that makes sense. And then how do you take partnership, I guess, ownership? Like, do you create like some type of business entity or like an LLC?
Try not to ever buy an LLC. When you buy a business, don't buy the entity, buy the assets. Because what you don't know and what you may not know, and it could be years depending on the statute of limitations for whatever the issue could be, but you could be buying liabilities you're not aware of because they're not apparent yet. For example, you could buy a business today and close, and tomorrow you get served a lawsuit. The entity gets served a lawsuit for something that it did 5 years ago, but it has a 10-year statute of limitations for fraud or whatever it might be. So that's why you want to start a fresh entity and then purchase the business assets into the entity.
And do you believe that course will be the best way to get more familiar that you mentioned?
There's a couple of other, mentors and a couple of courses that I've bought. They're like M&A guys. So what I appreciate about Cody and Ryan's course, it's for people like us, like small business owners who are looking to really build wealth quickly and give back. And it's not so much written from the Wall Street, Harvard business perspective. It's about, this isn't that sexy, but damn, it's profitable. And here's how you step into it. So the other ones out there, like Carl Allen has a course and he's got years and years experience, but I've taken Carl's course and I think Cody set the bar higher. I just think there's more value there for less money.
Chad, when you say, I just want to make sure, and by the way, James, I just want to make sure your question doesn't steer away from this conversation of, okay, when you say owner finance and you say that someone could acquire something with little to no money down, let's say it's zero. And then let's say that you look at the business and you say, all right, let's say you look at that employee and you say, hey, John, I know you've been paying 50 grand, blah, blah, blah. I can give you a raise, but who pays that raise? Where do you get the capital for that? Does that make sense? I guess that's maybe I'm overthinking.
Well, like I said, you have to come into the business with ideas. So you either have business development ideas or you have operational efficiency ideas, or that's it. Like that's what your role is from that point forward. Like you own the business, you do the brain work, you come up with the strategy and the ideas. And not every business you can increase cash flow, but just about everyone you can.
And then the current owner does that payment within the agreement of the vesting, the way you vest the ownership. Is that correct?
The current owner will just be, it's just based on a straight line amortization. So usually, so I'm going to give you $1 million for your business over 10 years. I'll make you 12 installments per year of X amount for 10 years with no prepayment penalty and whatever interest rate. Now, to protect that what you'll do to protect that seller in the event that you default is you'll have a vesting schedule, basically. So you'll have an amortization table that says on payment number 1, I'm paying this, and my equity, your equity becomes this. Or if I default, your equity is this. So like after 1 month of payments, he may still be able to claw back 99% of the business if you go sideways. After 2 payments, it might be 98, then 97, then 96. And every month he loses a percent, or it's going to be, maybe more than that. But you show him how you can mitigate the risk, just like a seller of a piece of real estate. I'm going to give you a first position mortgage. You were comfortable owning this house today, right? Okay, so the worst case scenario is you get all the money and all the work that I do, and then you still own it. That's not so bad, is it? And oftentimes they'll look at it and they know that they can sell the business for a hell of a lot more than they can the business equipment and the real estate. And oftentimes you can use the business to pay for the real estate. And what's really valuable is the real estate. And you've seen McDonald's use that model for their entire existence, right? McDonald's is disguised as a hamburger company. It's a real estate holding company.
There's a great movie about that, The Founder, if you haven't seen it.
Yeah, Ray Kroc. Yeah. And the guy, his integrator was the guy that did all the damn work behind the scenes. Like Ray didn't do, Ray just was the visionary. And that's what I'm proposing you do. Just be the visionary.
Cool. Thank you.
Yep. And I think it's Robert Kiyosaki. He really pounds that drum, and he started in real estate. But where did he go after that? He went into media and small, but more specifically, small business media. And he built his career in that. And then now at that next stage of wealth, what he's doing, he's buying businesses to pay for the real estate they sit on. And he's amassing a huge real estate portfolio by buying, but he's buying the business, so he gets the real estate. And everybody's tax situation is different, but there's a lot of tax advantages to all this too. And that's a big reason I was pushing that guy from wholesaling the house and walking away from the business to acquiring the house as a long-term buy and hold. So he didn't, all of his profit wasn't burned up in tax, and then acquiring the business as even more cash flow, and then showing him how to owner finance the whole damn thing and minimize the taxation for the estate or the decedent spouse. So we'll get you guys the link for Cody and Ryan's course. If you want to dig in, they do a call every, I believe it's Tuesday nights. I haven't been to one in quite a while because I've been on the road, but yeah, Winston said Tony Robbins owns several businesses. I think last time I heard Tony say, I think he controls 18 companies now. And that's what he does. He keeps starting companies. He's got a real estate company, a supplement company, a course company. Like, he invests in small business. His aren't all that small anymore, though. All right, James, you've been waiting patiently.
Hey, I appreciate it, man. I just jumped in the call, so I deserve to wait, man. I just got off work. I'm good, man. Hope y'all are well. I do home health physical therapy for a living, and I drive around Metro Atlanta all day. Anyway, I drove by a house today, called the owner. He said he just kicked some tenants out of it. There were 6 months back on the rent, and winded up meeting him over there. It was the first time he'd seen the inside of the house in a few years. Anyway, I think Zillow's saying the house is about 130. It's a small 1,000 square foot, 3-bed, 2-bath. But he said the rents were about 1,100, and that's what I'm seeing online. Anyway, I've done a few wholesale deals, but kind of like you were just talking about, me and the wife are really trying to buy and hold. I wholesaled a couple of deals that I really wish we could have kept. So my question for you is, the guy said he really wasn't open to taking the payments over time. I told him I could give him a better price, but I asked him what his bottom line was. He said he really wants about 100 for it, which, it meets the 1% rule. So, I think that's an okay price. It needs a little bit of lipstick. The inside's linoleum floors and trash everywhere, and 3-4 year long tenants. Now, we just bought a new car. Me and the wife did. We both got pretty good paying W-2 jobs, but she's like, well, we need to buy this house because we're thinking about doing the rehab loan, the 203K loan, I think it is.
That'll be your last one. You probably won't do that more than once. They're a pain in the ass.
Yeah, I know. I'm trying to watch some videos on it. It seems like it is a pain in the ass. But, the guy, he's like, well, if you're a flipper, you got the wrong house. I said, no, me and my wife are trying to buy a couple rentals, so I guess my question for you is, what's the best way to go about acquiring this if he's not open to owner finance? Should I try to put 20% down on it? Should we try to get an FHA? Because we own a house now, that we live in. I bought last year, but my wife's not, well, she's on the deed now, but I don't think she's on the mortgage. But, I'm just wondering if we're going to be bankable for two of those. I mean, we make, maybe 170, 180,000 a year between the two of us from our jobs. So
I want to shift your thinking away from conventional financing altogether on this. Like some people buy rental properties, FHA, or conventional. It's a huge pain in the ass. They're going to stop you out at 4 mortgages, and every time you go to apply for a loan, they're like, leave your personal credit there to buy other personal assets. Like you might want to buy a vacation home, and you might want to use an FHA loan or conventional for that.
right, well, you've been talking about going to these small banks and bringing in, because we've got 20, 30 grand I can bring in and open up an account. So yeah, I've got 20.
You want to go to someone who's going to underwrite the asset, not you as a borrower personally. So find a community bank somewhere between $1 and $3 billion with very little REO on their books. We shared a link. We had this discussion last week. There's a link to like the bank score, the way I underwrite them. But either go in and just open a business bank account with them. Do you have your LLC ready for the acquisition?
Yes, sir.
Okay, so just open a bank account for that LLC, put it on deposit, and then ask for a meeting with the head of commercial lending and have your pro forma there. Say, listen, here's what we can acquire the house for. Here's the repairs. Here's this, and this. A lot of times, and I was shocked that I was able to do it even without them knowing me, but they kind of based it on my personal credit score and the amount of cash I put in their bank. But when I first moved to Roanoke, I met with, at the time it was called Valley Bank. It was a relatively new bank. It's been sold since. I put 25 grand in an account, sat down with the president of commercial lending at Valley Bank, and they said that they would give me 85 LTV on the appraised value. Well, hell, if you're buying houses at discounts, that's your full acquisition and rehab budget and then some. And they didn't even come out and take pictures they didn't even set up draws. Like you can literally walk away from the closing table with a big ass check because it's not under the regulation of residential lending. And that's why I say for your investment portfolio, you're usually better off to stay the hell away from any kind of residential loans, because there's so much freaking red tape. And you can go to the commercial side of it, but the same bank, and you'll pay 2 points higher, but you'll walk away from the closing table with the cash. You won't have to get hard money, and you'll still make a solid return. And you can always refinance. But in this rate environment, I looked at, one of my lines yesterday. And so this was First Citizens Bank, which is no longer very small. It's a $25 billion bank now. But First Citizens is awesome. And I think they're in Atlanta. They started in Raleigh, but they're all over now. But First Citizens offered me on a $380,000 acquisition with $155,000 CapEx. They offered me a 90 LTV at 3.75%. non-recourse, a commercial note. And I'm like, are you shitting me? And that was before negotiating. But those are the kind of terms you can get. And people are like, oh, you got to do hard money. You got to do private money. You don't, man. You can beat even private money rates, and you can close inside of 2 weeks if you have the right relationship with the banker, because it's asset-based lending. So are you familiar with debt coverage ratio?
Not really.
Okay, so go to Investopedia, and Kat, if you can find a link on Investopedia for debt coverage ratio and loan to value. I want you to understand those things before you go in, because that's what they're going to be looking at. If you say the house is worth X and it will rent for X, it's worth 100, it'll rent for 1,100. They're going to look at, if I issue this guy a loan, he pays the taxes, the utilities, the insurance, all the expenses. Is there at least 1.3 times as much income as there are expenses? And as long as there are, that's your debt coverage ratio. Oftentimes when you get into good deals, hell, you can get a DCR of like 3 on when you get one of those deals where you're like, oh, home run. Oftentimes those will cover 3 to 1. Most community banks are looking for a debt coverage ratio between 1.25 and 1.35. Not that hard to achieve, man. You can buy shit off MLS at a 1.25 debt coverage ratio.
Right. That's what I was wondering, if this deal was too skinny, because it seems like he doesn't want to go much lower than 100.
So let me ask you this. What's he going to do with the money, the seller?
That's what I was asking. He's in his 70s. I think he said he tried to get the rental to his son, but his son wasn't really, I guess.
How long has he owned the asset?
30 or 40 years.
Okay. So his cost basis is probably, he's already depreciated the thing to death. His cost basis is down here. His gain is going to be up here. He's going to lose over a third of his money. He's going to lose to taxes. It's a foolish move for the seller. He doesn't understand the tax code. And well, likely not. I don't know his whole tax picture, but it's going to create a sizable taxable event for him where if he would own or finance to you, then he can spread that out. And so anyways, look at the tax benefit to him owner financing to you and show that to him, like literally show him the dollars. And that was back to the conversation that turned into a small business acquisition. That was the same scenario there. It's like, no, I want my cash and I want it now, but they had a super low cost basis and they were going to get a hit with a massive gain. And it made more sense to owner finance it. $40,000 or $50,000 more sense to owner finance the deal than it did to sell it outright.
Right. How can I get more educated on that, Chad, as far as how that works if he was to owner finance it to me versus the tax?
Start with Bigger Pockets. So you can go to biggerpockets.com, search the forums, and look at tax benefits, creative financing to maximize tax savings. I'm sure Brandon and David have talked about it on the podcast. Brandon wrote the book, How to Buy Real Estate with Low or No Money Down. So they have a deep understanding of it, and those guys do a lot of creative stuff. Investopedia is a great place. Like if you guys hear me and you're like, what the hell is he talking about? Like Investopedia has built quite a database of non-Wall Street financial knowledge. So like if you want to go study debt coverage ratio or loan to value or any of those other things we've talked about, that's a good spot. But Bigger Pockets is one of the best resources in the country or in the world for aggregated real estate knowledge.
Sure. And one more thing, Chad, I bought a rehab program. I think a couple flippers did it over like a 6-month period where they actually film and go out. I paid for it. I think it's $1,000 now, but I got it on the first week it came out. So for $500, but within this group, I'm only doing that. But if anybody's interested in taking a look at it, I'll willing to share it for them, share it with them.
Sure. One of the other things I want you to learn about is unrelated business income tax, or UBIT. So I'll leave it at that. You come back and tell me why it makes sense to flip houses versus other strategies. The first thing I ask when I'm coaching somebody, I'm like, what's more important? Do you need cash now or do you need wealth later? And your strategy is going to be largely different based on your answer to that. If you're worried about wealth later, don't be flipping houses. You're just giving away good assets that will pay you for years and years and years. And do you guys have kids? Yeah. So you ride that son of a bitch until you're dead, and who cares if Joe Biden takes away your step-up basis? Like you turn it into a piggy bank, you get equity in the house, you start cross-collateralizing your future deals with your current equity, build your balance sheet. The hell with wholesale fees, and you'll get smashed with taxes when you wholesale. You get smashed with taxes when you flip. When you can like buy even just straight line depreciation, just buy and hold your whole life. You die, it's in a trust anyways. It goes to your son and he picks up where you left off. So if wealth is, and you guys, you said you've got strong W-2. I mean, flipping is fun. It's fun, but if you're going to flip, buy it, live in the damn thing for a year or 2 years, and then flip it, and don't pay any taxes. But like flip smart, or hold it for at least 13 months. Like rent it for 12 months, then pull it off the shelf, and then flip it, and then pay capital gains on it instead of UBIT and earned income tax rate. And the other thing, if you do want to flip, and I don't want to discourage anyone from doing it because I've done it too. If you do flip, as soon as you get done with your flip, make sure you're not closing too many of them in the fourth quarter, because as long as you leave yourself a quarter, you can go acquire a bunch of other real estate to wash out your gains, and you can do accelerated depreciation, especially if you're buying in opportunity zones or you're buying assets that'll give you cost segregation. So, I mean, sometimes you're like, man, I can make 150 grand if I flip this house and I can work on it for a month. It makes sense. Just have your next acquisition stacked up where it'll wipe out that liability. All right. So Corey asked, do you do much 1031? So, man, I don't really believe in tax deferral in this environment. The last thing I want to do is defer taxes. I want to pay as much income tax as I can pay right now, because I don't believe there will be a time in my life, considering we have already printed nearly $10 trillion in one way or another. And I think that that's the agenda that politicians globally are committed to. So I think they're on the devalue the currency train, and they're just going to keep pushing because they can't unless we take rates negative. But they're probably going to have to rise rates and collapse equity. So it looks like politicians think that they can just take back wealth mainly from the middle class. And 1031, the rules are changing. They're moving goalposts they're proposing to move goalposts as we speak. So for me, I don't ever want to defer taxes. I would rather pay in this historically low tax environment. I would rather pay my taxes now than I would when I'm 60 years old. And to the point where I have restructured all of my retirement accounts. Anything I had that was traditional, I flipped it. I did a Roth conversion. And I've been coaching people based on their specific situations. A couple of folks that I coach have actually just taken the 10% hit. They paid this year, the 2021 tax rate, the 10% penalty. But now they just go open a Roth directed IRA in place of where their traditional 401k was. But for me, I see taxes raising more than 10% on that person based on their income level, on their earned income level. So they're difficult. They create urgency that doesn't serve you as the buyer. A lot of people end up with assets they didn't really want because they had a short fuse and they're like, I got to buy one of these three. But I'm not a huge fan of them. You can rack up tons and tons of savings and scale up, but at what's the tax rate going to be when you have to pay that on your whole portfolio? Thanks, Martha. I appreciate that. All right, cool. Corey, did that make sense to you?
Yeah, I just don't have a door in my new office yet, so I can't talk too loud.
Okay, you have to tell all your success stories quietly.
No, shh. I'm at Windermere now. We switched from Remax, so
Oh, is that right?
yeah. So,
Where's your office now?
just down the street from downtown Burien, basically. So south of Seattle,
All
just a
right,
hair.
cool.
Like
Good to
finding
see
that
you,
tire
man.
on I-5.
Yeah, find my damn wheel. It's a mystery. I apologize. I didn't get to have any time with you face to face. It turned into a bit of a crisis. And then last minute, a guy calls and he's selling me a house for 30 cents on the dollar that I really, really want. So I had to dash back here to get that deal.
Yeah, it looks like you're back home, I was going to say.
Yeah, I'll tell the probate story once I get when I've got a deed in my hand. I'll tell you guys a very interesting story about my small business path. It started back in my cowboy days when I became a fence builder. This summer makes the 20th anniversary of me building the fence on this property. Come full circle, I'm buying it in probate. So it's an interesting tale. But yeah, so I had to run back here. So I'll catch you next time I'm in Seattle. Made a mad dash. All right, guys, well, we're past the hour. I'm going to jump. Hopefully you got some value from this today. It wasn't our typical probate real estate conversation, but always an interesting conversation with you guys. We'll get you the link with the discount code for the unconventional acquisitions course that Cody and Ryan have. And maybe I'll see you guys over there in that community and on their calls. I try to participate every time I have a chance. But as always, guys, very grateful for all of you, all your participation, your bright minds. Have a great day.